Hi, this is Farzan Ghadially, your finance expert. Today we are really going to look at, with Nifty at 17,500, the market has performed very well in the last couple of weeks. All the negativity that the market will crash, there will be a huge correction of 30-40% has really gone away. A lot of investors and a lot of traders are really looking at this market as if it's a new bull run. The question a lot of investors and traders should look at, is this a new start of a new bull run? Or is this a bear market trap, a bear market rally wherein a lot of investors and traders will go long, buy into equities, and then the market would really come down? This is what we are really going to look at. If you look at the equity markets, you will have to look at it in two perspectives. One is the long-term story, and second is the medium and the short-term story. When you look at the Indian long-term story in terms of the economy and in terms of the stock market, the story is incredible. India is going to be probably one of the best performing economies on a 5, 10, 15-year duration that is really there. Hence, the markets are going to do very well. When you look at that kind of perspective, India will be the best emerging markets in years to come. Undoubtedly, it will be a $5 trillion economy, and it will make the transition from a developing to developed nation. Putting all this in perspective, hence the long-term story of India is intact. Investors around the world and companies around the world want to come into India, either invest in form of foreign direct investments and set up shop here, or invest in really the stock market. However, when you're looking at investment in the stock market, you should look at it in terms of a medium or a short-term approach. Relook at your portfolio every 6 or 12 months. And then really look at which are the companies performing well and which are the companies that are not performing well. The strategy that you buy into a company and not look at it for 15, 20 years has not worked and will not work. What you really need to do is make your capital to best optimization use, wherein you identify companies, if they're doing well, continue being invested for a long period of time, maybe 5, 10, 15 years. However, for whatever reason the company isn't doing well, you should really get out of that company and allocate that capital to another company. Hence, all investors should look at the Indian story in terms of a 6 to 12 month horizon. The stock market really discounts or really factors in the near-term future. Some of the biggest worries that the stock market had or probably still has is inflation. If you look at inflation in the US, from the peak of 9% at a 4-decade high, the inflation has really come to 8.5%. It has gone down a little. Similarly, in India, it is estimated that the inflation has really peaked. It will really fall down over a period of time. Hence, inflation may not be a big worry. What is important for a lot of investors and traders to understand, that when economists and market participants say that inflation has come down, what does it really mean? If you buy any object or you buy any item that is really there, say for 1,000 rupees, and the inflation is 10%, it really means that that 1,000 rupees item will become 10% more expensive in due course and be placed at 1,100 rupees. Now, if the inflation has gone from 10% to say 5%, what does it mean? There would be a 5% increase really in the cost of the same goods or the same item. Hence, it is not that the price of goods will go down. If you look at the Indian economy over the last 4 decades, prices have been rising. So when you hear the term inflation is coming down, doesn't mean prices will reduce. It's only the rate at which it increases will go down. Hence, inflation was a worry, continues to be a worry, and is extremely important for a lot of viewers and investors to understand that when inflation goes down, it's only the rate at which increase will go down. Another major worry that is really there is in terms of recession. Many countries in Europe, US is under recession. If India is really looking at this kind of scenario, it's a double-edged sword, because at present, prices are rising, inflation is rising. At the same time, the GDP growth is coming down, hence it's stagflation. So it's a policy maker's nightmare. That is still really there. Also in the near term, we have the geopolitical instability that is there. The Russia-Ukraine crisis has been played out, and has been discounted in the market. But we really don't know in terms of the Chinese-Taiwan crisis, a potential crisis that may really come in the coming months. Hence, geopolitical uncertainty still remains a scenario traders and investors should really look at. Another important factor is valuation. Please remember, when you buy a stock, price is what you pay, value is what you really get. Hence, when you're buying into a stock, it doesn't matter whether you're buying a stock for 20 rupees or 2000 rupees. Never look at the value you're really paying, but what is the valuation at which you're really buying. India, valuation heavy market throughout. So if you really look at Indian valuation compared to other emerging markets, we've always traded at a premium. This is because of the kind of potential that the Indian market really has. Hence, when investors or traders are really looking at investing in this kind of turbulent markets, they should keep an eye on valuation, which is very important. Also, please remember the conventional way of value investing. When you look at value investing, what are we really saying? That, buy into stocks where probably price earning is less than 10 is very good in theory, however, has never worked in the Indian markets. In the Indian markets and the history of trading in the Indian markets, what has traded at a higher valuation and so-called expensive stocks have given the returns, and all the stocks that have traded as value investments and fall into the theoretical framework of value investing have not really given returns. Hence, investors or traders shouldn't fall into the value trap and really look at potential that the stock really has. At the same time, there is a lot of talk in terms of these new age companies that have got listed. A number of startups have been listed on the Indian stock market. They listed in excess of 1 lakh crores of market capitalization and came crashing down. A lot of investors and traders lost a lot of money in that. A lot of critics really say you cannot apply conventional valuation methods on new age companies. You really need to apply new age methods to new age companies. Hence, look at the sales or the top line rather than looking at profitability. But what investors should be very cautious when you're really looking at sales or top line. At what cost is the sales generated? Today, if I'm selling an item for 1000 rupees and there is a startup that really comes about and sells that same item for about 800 rupees, bearing in mind that the 200 rupees, the loss that it is bearing will be covered by the investment that it really gets in, and eventually someday they will start selling it at 1200 rupees and make a profit. It's a very difficult scenario. The sales that you are generating is for the reason because you're selling it below cost. Indian consumers are very smart. They will really look at the best package or the best value that they can derive. Hence, this concept of, capturing market share and constantly losing money or burning capital may not really continue, and investors should be very careful. These companies some of these companies where earnings have started picking up, the valuation gap is so large that there is an evident correction still in most of these companies. Keeping this in perspective, what should really the investors do? Where should they really put their money? The most important is look at a portfolio approach. Diversification in these turbulent times is the key. Look at equity as an asset class, look at debt as an asset class, look at REITs as an asset class, look at gold as an asset class and real estate. A balanced approach in terms of overall portfolio will really help the investors. This is not a market which will go one way from where it really went in about April of 2020 till date. There will be a lot of volatility. There will be a lot of turbulence that is really there. Where should investors really invest? Investors should really look at a lot of small and medium enterprises, mid-cap companies as we really call it. That is where a lot of wealth creation will happen in the next 12 to 24 months. So what should investors look at? They should look at some kind of USP, unique selling proposition that those companies have. Is it a product that they have unique? Is it a service they render where other people are not rendering? Is it some kind of specialization that is really there? Identify the USP. That's the first. Second most important is look at corporate governance and management. The biggest risk in investing in these small companies is lack of corporate governance and management. Please do a little research, read up if there are any cases for or against the management and the company. Is there any issue that has been created in the past? Small investors may not have the opportunity to meet managements and promoters of companies, but a basic research on the internet would really help. Also look at the quality of investors. If you have some known investors that have invested in these mid-cap companies, it should really give you confidence that, these are the guys who really research well, they have done their homework and they have put their money that is really there. Hence, that is what investors should really look at doing. Also, please remember the biggest issue in a lot of these mid-cap companies is liquidity. If you are really investing, be very careful to have a balanced portfolio. Don't put all your eggs in a mid-cap company. Look at a certain percentage and put that depending upon your risk appetite in mid-cap companies. Because these are the companies that will give you the 2 times, 5 times returns or multi-baggers that we call it, rather than only the 10 and 15% return, which you can really attain as far as the large cap companies are concerned. Also, please remember, never ever in these companies or in the stock market average downwards. What do I really mean by that? You bought a stock for 100 rupees, stock goes to 80 rupees. What is the normal investor or trader mentality? Let me buy more at 80 rupees so my average cost comes down. The stock from 80 goes to 60. What do you really do? You buy more stock that my average price goes down. This is really throwing good money to bad. Completely avoid that. And remember, really have a cutoff that says that, 25%, 30% or 40%, depending on your risk appetite. If the price goes down, you will exit the position that is really there. In the market, it's very important to use capital in an efficient manner. When I say use capital in the efficient manner, invest the money in companies that continue to grow. There is no point in waiting for eternity and keeping an investment till the company really comes up or does well. As we said at the start, the prospects of the Indian stock market are fabulous on a 5, 10, 15-year perspective. The question is, you will have to be an active investor. You will have to monitor your portfolio. Which are your good performers? Which are your bad performers? Keep churning your portfolio and thereby getting good returns. Inflation will keep rising in a developing country like India. As I've explained, when inflation comes down, it's not prices have come down. No prices have really come down in the last 20, 30 years that everyone is really aware of. Hence, to beat inflation, equity is the asset class to be. If you're not a professional investor or don't have the time, please take help of a professional or go the mutual fund route, but invest into equity because on a long-term perspective, more wealth will be created in India in the next 10 years compared to 75 years, but you will have to choose where are you going to make that investments. That is the critical part that is really there. So wishing all the viewers good luck. There is going to be a lot of volatility and turbulence in months to come, especially with festivities coming up in the next couple of months in India. There will be a lot of propensity to spend. There will be good results that are really there. Don't get carried away. Don't think the worst is behind us because the market is always correct and keep surprising us. Hence, be cautious, invest in good companies and be an active investor and keep monitoring really your portfolio. Till we meet next time, good luck and be safe.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.